it's still taking 42 days on the average to close a loan, even with all of the advancements in technology in the last many years. The biggest value the appraisers bring is their ability to analyze that data, to synthesize it, and to render an opinion of value based on that information. The first time you saw a walk through the house 360, you were like blown away, right? Now that's kind of like, well, where is it? Why isn't it in here if it's not there, right? The appraisal is just one component in the manufacturing of a loan.
Episode 68 of Market Moves with Mark and Jeff, two uninteresting guys talking about interesting times and sometimes invite an interesting guest, which we have today, Jeff. It was May 9th, 2024 that Market Moves released its very first podcast episode on Perea, and our good friend, Shawn Telford, risks his entire career and reputation to join a startup podcast, and looks like he still has a job. Shawn, welcome to the podcast again.
I am happy to be here, and I'm still at risk.
Duly noted. We're going to see what we can tease out of you, Shawn, that might get you into hot water later on. So be on guard for that. But yeah, I was thinking about that too, Mark. It was a lot of fun to kind of kick this thing off initially with interesting conversation with Shawn on Perea, as a result of your involvement with the AQB and the qualifications for becoming an appraiser in the first place. Today's topic is certainly not that, but we really appreciate you being willing to come on and talk, Shawn. Mark and I were talking before we connected. We're like, this is going to be an easy conversation, more like, three friends sitting around talking than, like some formal interview, even though we do have somebody who's high and mighty and important, at least in our eyes, to talk with. So we appreciate you being here.
Oh, thank you for the invitation. I always enjoy talking with you too and learning things. It's a good opportunity.
Boy, absolutely. Well, the thing I think that spurred the interest in the conversation was a recent article that you had written for the Appraisal Buzz magazine. And one of the things that Mark and I are striving to do is to be addressing not just appraisal topics for appraisers, but really valuation topics and how they impact markets, to a broader audience. And a lot of what you talked about, Shawn, in this article, in the Appraisal Buzz, the article was called "The Strategic Advantage of Certainty in Mortgage Lending." And you really address it from the perspective of the mortgage lender, as well as from the borrower, who's, obviously intimately involved in this loan application process. Appraisal touches the loan production process, to be sure, but it's not the only piece in putting together a mortgage loan. And so there were a number of, I think, key insights, things that opened our eyes really, I think, quite effectively. The first thing that stood out to me, and I'd love your perspective on this, is, you call it the loan manufacturing process. And that, for whatever reason, really resonates with me. It's not that you have a widget that falls off the end of a conveyor belt, but it's not dissimilar at all from from the starting point. There are a lot of pieces and touch points that go in before this mortgage is, finalized and people start making their mortgage payments. How long have you thought about the mortgage lending process as kind of akin to manufacturing? And I'm just curious about your perspective there.
Sure. Yeah. So I wish I could say I coined that phrase, but it's something I heard from others, over the last, many years of working closely with our lender partners, with the folks at Fannie and Freddie, and thinking about the overall process, right, of manufacturing a mortgage loan. And I remember the first time I heard that phrase, it really resonated with me, and I've definitely used it liberally since then. But it describes the concept of assembling the different components that make up the mortgage loan. I mean, at the end of the day, it's a loan file made up of documents that validate and verify and indicate the different measures that a lender uses to ensure that they're making a loan that's appropriate, that's sellable, and that the borrower meets the right parameters and so on and so forth. And so, to me, it's just a good way to think about what what we're part of in terms of the collateral component, right? The credit part, the collateral part, and those are just two pieces in putting it all together.
We think about the appraisal process as a manufacturing line as well. I think specifically in the work Jeff and I do, we've dissected it. We've looked at what does an appraiser need to do? What is an appraiser required to do? And then what is an appraiser not particularly good at? What are their skills not set them up to do well? Just processing the file or whatever it might be. And so we've thought about it in a similar way on the appraisal side. So it's interesting. I have so little insight into what you describe in the article as a sequential assembly line manufacturing process, which really seems to present an appraisal speed problem to some degree at the back end, because while it could have been ordered in parallel with something else, it typically is not, and there are problems created there.
Yeah, and there's obviously reasons why it is the way it is today, right? That things that some reasons may be legacy and traditional, and others may be practical in why the lenders do what they do. But as we think about the manufacturing process, in order to speed it up, then you're going to have to maybe look at how you manufacture that differently, right? I think of I don't remember which book I was in. It was a business book, but it was a story about builders trying to build the house faster and get to closing faster, right? They were using an example in there, and they used the example of, often the buyers would do the final walkthrough and they'd find all these little mist paint things on the wall, and they'd go around, put the little orange stickers on there. And, we've all seen that. And then they would have to rush out there and deal with the painting before it was a condition to close kind of thing. Well, somebody at the builder had the idea, hey, who's the last person coming through the house that works for the builder? Well, it's the plumber. They're putting in the finished plumbing. So they said, what if we gave the plumbers a small incentive to, as they walk through the house, to put the plumbing in, if they see any paint problems, to put up an orange dot and catch those issues earlier in the process, so that at the end of the day, we'd end up with solving those problems earlier in the manufacturing process. And so, there's ways that I think we're going to have to think about it as an industry in order to really get to where the lenders want to be, which is that quick close, that very speedy close.
That makes a lot of sense, Shawn. And one of the things I've observed is, and one of the things that you mentioned in the article is, on average, I think the number of days was 42 days to complete a loan in this manufacturing process. And of course, when things were super busy in COVID, it was longer than this. But I think you're referencing, maybe a 5-day turn time on average for the appraisal. And so, the question is, well, if it takes 42 days to make the loan, from start to finish, and it only takes 5 days to complete the appraisal from start to finish, how in the world can the appraisal be the bottleneck unless it's just shoved in at the very end, kind of like, like this touch-up painting at the very end, right?
Yep.
I'm curious, do you see a plausible pathway to, for lenders to change how and when they order the appraisal? I've seen some indications that, as soon as a borrower actually is charged for the appraisal, they've got some financial skin in the game, they're more likely to go forward with that lender and close the loan. And so I could see at least some level of motivation to maybe adjust things. But through your interactions, I'm just curious if you see that as being a likely outcome of sort of this call to action or not.
Yeah, there are certainly a lot of different paths that could be taken. So if you think about, why does the lender wait to order the appraisal till later in the process? Well, they may want to validate a bunch of information about the credit side before they pull the trigger and spend the money and so on and so forth. So there's ways that we can get more certain quickly in terms of the credit. That's obviously a positive. There's a model in home equity lending. The lender typically covers the cost of the appraisal or valuation. It's different in the first mortgage, right? So there's ways that the lender could change their financial model to, make it easier to pull the trigger earlier in the process and be, eliminate that sequential waiting period. I know, I think in the article we talk a little bit about lenders are they have their reasons for why they may wait to order the appraisal. And sometimes it can be that, they want to get everything else solved, and they know there's potentially issues with the collateral or the appraisal. And so they compartmentalize that and deal with it separately. So I think, if a lender could shift to thinking about the process differently, then perhaps they'd find a path to go down that thing, Jeff. I mean, I don't know that I have the magic bullet approach for how to do that, other than you can. It seems common sense when you think about it. If you can do it in a non-linear fashion, do more things in parallel, you're going to speed up the process. And so I think there's many different paths, and certainly we're seeing lenders change their behavior as they incorporate AI and different collateral valuation options into the mix. So I think we're going to see a lot of change in how that happens. But as we say, it's still taking 42 days on the average to close a loan, even with all of the advancements in technology in the last many years.
Boy, there's so many places to go, and I think I've got to make sure we go back to the beginning, because my amateur podcast setup has not done a great job of that. So we'll do that, but I can't get past this fact, Shawn, that the average closing time is 42 days, and in the article you described the good old days at Washington Mutual, where the hope in North Star was 10-day close. And here we are decades past that, and we're on average four times longer than the North Star then. My goodness. Yeah,
it's certainly the notion of speeding the mortgage process up, making it is not a new idea, right? I mean, that's not a concept. Making the appraisal shorter is not a new idea, right? But the thing that I've learned from different folks that we've been working with has really helped me hone in on the thinking is, if you shorten the appraisal process and you shorten the review process, it's a positive, no doubt, right? No one wants to waste time, but it's not going to solve the real problem of this lengthy closing process. And in the end, we also did a survey, Cotality did a survey to different buyers through a component of our business. And they clearly indicated that while speed is important, they want to trust, they want a level of certainty, they want a level of comfort in the process and how it's going to work. And that is as important, if not more important, than a quick process. And so, I say all that to say there's ways we know we can simplify the manufacturing and do more of the process, simultaneously. But at the end of the day, it's going to require many different pieces to shift how you're thinking about the manufacturing process.
So Shawn, there probably not, but there may be some listeners and viewers that don't know your role and where you are. And as chief appraiser and valuation officer of Cotality, you guys have software businesses into all aspects of mortgage and more. And you started this article out with, you just spoke about one of the surveys, I think, of borrowers. And I think there was one also of lenders to some degree. And it was the foundation for the article that you were writing. And as you just kind of laid out, that it is a stated set of expectations and a level of certainty that those expectations will be met is kind of what people are after as it relates to the appraisal process.
Yes. That's correct. It's not speed that is the driver. It's not the most important thing. No one wants a slow process, but at the same time, people want to be comfortable and understand and have certainty in the process and trust the participants in the process. So the survey was from our real estate side of our business, which is where we have data and solutions for real estate agents, brokerages, MLS systems, and such. And so it's learning more about the buyer behavior. And certainly when you're making the offer, there was a desire for speed in that process. But after that, it was about certainty, about getting the mortgage done, about timing it all out, because there's so many things that come together when you're buying a home, from the moving and the coordination and the selling and all that. So it's the no surprises components, that part of the business. So that's I learned a lot in that. And I think there's a quote in there about that the trust in the individual and the comfort and the certainty that the buyer got was more important to the redoing business again with that professional than the speed of the transaction. And so, I mean, it's common sense when you think about it, but anyway, it's something I don't know that we think about when we're like, how do we really make this mortgage manufacturing process different to where, it's a less cumbersome, less problematic event.
Shawn, knowing your seat and kind of seeing the full field, of the mortgage transaction, and in reading your article, I think one of the reasons I was really excited to talk about this here with you is that it resonates what you just said, about the certainty and the level of expectation. I have had confusion often talking to lender clients that the faster I can, in not all cases, but in many, the faster I can deliver it, there's a good enough element that where my pitch to deliver even faster is not landing clearly. It's not striking the chord. There is here's where I need it to be. I need you to never be beyond that. But as long as you're there, that's fine. And so reading your article, it really resonated with me, I think, in my experiences kind of in the marketplace, seeing what folks value.
Yeah. I mean, if you're going through the drive-through at Chick-fil-A and you're expecting, it to be a 5-minute event, you can trust that. If it's a 25-minute event, you're going to be upset. You're going to be angry. If it's faster than 3 minutes, you're like, oh, this is cool. Man, no one's here. But it's the level of what's acceptability, right? And so if I'm making a loan, if I know I can count on a result in a standard time, that's important. And to me, the rush and the hurriedness and the pressure at times, it gets laid on the door of the appraiser. It gets laid at the feet of the appraiser, but it's really another problem in the manufacturing process that's left this last component, so to speak, out there, and then the appraiser bears the brunt of it. And in my opinion, unfairly, a lot of times it's laid at the feet of the appraiser that the delays are caused by the appraisal process, when in fact they're not. I think we put a statistic in there that it's 5 to 6 days on the average for an appraisal across the nation today. I mean, if there's 42 days in the loan process, clearly the appraisal is not the long pole in the tent, unless you start it on day 38 and you're trying to close on day 42.
I don't think there's anybody who hasn't at some point felt that pain point, though, of, oh crap, we forgot to order it, or for whatever reason it didn't get ordered until day 38 or 39, and then all of a sudden it's a problem that the appraiser inherits. Well, we got to have this back in 3 days because we didn't order it in the first 38 days that we could have, on average in this process. And I've even seen scenarios where a lender says, hey, we need it back in 5 days. And then the appraiser's trying to make arrangements to go, get into it. The agent's saying, well, hey, we've got a deadline that's a due diligence deadline that's sooner than that. So we really need you to get it back even faster than what your client told you to. And it creates a lot of, I think, challenges by, dropping this at the end of the process. And like you say, Shawn, I know there are some, reasons that make sense for lenders to not do that until they know that the borrower has the credit worthiness to get the loan in the first place. What does the value of the collateral matter if the borrower can't qualify for the loan, from a credit perspective? So there are those aspects for sure. A couple of the things that stood out to me, though, or a couple of the words that just keep jumping out to me from your article around this process is comfort, confidence, and certainty. And I think you say, especially in collateral valuation, or what matters most to the borrowers and the lenders. I think your example of Chick-fil-A, going through the line, if I get through about as fast as I expect, that's more important than having it, it's an extra 30 seconds or 60 seconds faster than maybe what I was anticipating. But if I get held up beyond what I expected, I'm less likely to go back, than not. In terms of like the comfort and the confidence, do you have any anecdotes, or what's your perspective on what borrowers and lenders are looking for specifically out of the valuation process, in those regards?
We've seen from the perspective of appraisal and interacting with Fannie and Freddie in the last couple of years, we've seen the Fannie and Freddie pushing out a lot of information about their industry-wide observations and challenges with appraisals. They've talked a lot about the comparable selection, about adjustment support, about support, and many other things. And so these are messages not only to the appraisers, they're really to the lenders who are the clients of Fannie and Freddie. And so they're saying, hey, lenders, you need to make sure when you deliver these loan packages to us that the collateral valuation process is supported and so on and so forth. And obviously appraisers do that. But we also see that there's a very high rework rate. Nationally, I think the number, I'm going from memory, is in the 40s, or close to 50. And what that means is that when the appraisers are delivering reports in, there's issues found, whether large or small, that require another event from another kickback to the appraiser to be resolved with. And that, we don't need to debate whether they're real issues or not, but the fact is that that's happening today. And that, of course, creates an uncertainty level, a norm from the lender's perspective, that I'm going to have to deal with this uncertainty of what will the appraisal results look like. Are there going to be challenges I've got to fix, or problems, or corrections around data, or just consistency between address, or whatever it might be, but that's going to have to be resolved. And so to the extent you can eliminate that expected uncertainty or the need to have that revision, then I think again, this is Shawn's opinion, a lender's going to be more confident in ordering the appraisal sooner, because they know there's not going to be known issues with the report. And so to the extent we as an industry can ensure that the fixable things are fixed, right? The things that do get kicked back are, underwriting concerns that are maybe more legitimate in the view of many appraisers than, can you explain why you didn't include this, that, or the other in there, or, change the address from street to ST, things like that. I think you see where I'm going with that is in my observation, eliminating that consistent need to do the rework is only going to help shorten the process, but also add confidence that the data and information from the appraisal side of the collateral valuation components is reliable from the first, at the start out, get go.
No, that makes a lot of sense. And I've seen that handled differently from different lenders, but all trying to speak to that. I mean, nearly 50%, essentially revision rate on appraisals that are submitted initially is way more than I would expect, nationally. I know maybe it doesn't surprise me all that much, but I see lenders and, lending clients try to handle that differently. Some will say, hey, we're not counting your appraisal is done until the last revision's in and signed off on. And so your cycle time or your turn time isn't just when you hit send on the initial report. It's once you've actually answered the very last question or like revision rework that's come back. Others have said, hey, you got to get it in on whatever your due date is, but we're then going to define, a certain number of business hours or calendar hours to return all rework revision requests, because it is a pain point. And I think you're framing it as like another point of uncertainty makes a lot of sense. The appraiser might think the appraisal's done, the borrower and the agents might think the appraisal's done, but until it's actually cleared from, through the underwriting process, it's just really not, even if you think, hey, it's been submitted, so therefore we're good to go. I see that, that's a good example, I think, of uncertainty that comes up that many don't anticipate, except for the ones that are, trying to orchestrate this loan manufacturing process that knows, hey, we got to have underwriting's blessing before we're actually, cleared on the appraisal.
Yeah. And, as we move into the era of AI, as we were, talking in preparation, there's so much of the data that's in the appraisals today is ubiquitous in the marketplace, right? There's lots of sources. The lenders, Fannie and Freddie, are using data from sources that are widely available and could be used by anyone in that process, right? And so, to the extent we move to utilizing that data sooner and in our own manufacturing process as appraisers, you're naturally going to eliminate that. And I'm not the first one to say this. I mean, others are working on it and thinking about it, trying to figure out how to do it. But to the extent we can, leverage AI to say, okay, run this, put this appraisal into AI in a secure, appropriately confidential scenario, and say, does this conform to the Fannie or Freddie selling guide as of today? Are there problems? Are there issues? Preemptively dealing with that is going to only create a higher level of certainty as the product that the appraiser is producing, the analysis moves through the system, and that just makes the whole process easier and simpler, to the point where maybe then a lender thinks differently about how they can order those components, right? I mean, so much of what is happening in the loan process today is instant, right? Instant verification of assets, of deposits, of employment, of credit, and all that. The industry is moving towards that, and so while the mortgage lending process may not ever need to be instantaneous, it certainly could be quicker than 42 days, or something even back to the old WAMU. Let's see if we can get to 10 days, 10-day closings. Maybe that's the right number, maybe it's not, but there from the appraisal industry, I think there's more we can do at all the different components to provide that certainty to our clients, that when they get the report and the information and the analysis, we've covered all the bases that we know they're worried about, and they can move forward in other processes, not worrying about the appraisal process.
I'm using this analogy so much. I honestly think I used it on the last podcast that we put out, but I'm going to say it again because I think it's applicable. But this whole process to some degree reminds me of submitting your tax return to the IRS, where they know the answer. They are asking you to give them what you think your tax return looks like, and then they will tell you if you're wrong. And then have you correct it. And like on a lot of levels, Shawn, it feels to me like, I mean, not everywhere, certainly not in the actual analysis piece, right? There's sales to consider and the appraiser's opinion and all of that, but there is so much. And I feel like a lot of entities have tried to go after this, what seems like not a paradise, but like the end all be all that we're trying to get to. And Cotality seems to be set so well at, they have the data. You talked about ubiquitous data. Well, a lot of it is sitting within, Cotality, and then even built on top of it because of Total and all of your loan origination softwares and all of that, And so I wonder how much an entity like yours can help bring that stuff together, where it isn't this tax return submission to the IRS.
Sure. Yeah. And, our solutions for the collateral valuation space, do run the gamut from the appraiser's process to the lender's process to supporting the secondary market. So, certainly we're favored with great customers and lots of opportunity there. And I think there's a lot of activities in the marketplace today that are going to allow us to get more towards that mark, to where the components are less distinct and separated. Those handoffs become less, I guess, just less distinct, right? Because as I mentioned, there's so much we can know about the property before we even go out to the property, right? And so again, this is a little bit off of the topic, but I'm of the opinion, this again, Shawn's personal opinion, that the biggest value the appraisers bring is their ability to analyze that data, to synthesize it, and to render an opinion of value based on that information. The collection of the data today can be done by so many other methods to get the information and data, whereas 30 years ago, we didn't have all of these databases and information, and we had to physically go, or we had to be the primary data gatherer and rely less on secondary data, and that's obviously changing. So I think that part of the appraiser's role will shift to being more of the analyst of the data that's already there, and providing that to the lenders, and helping the lenders to understand the collateral in that respect. And so certainly, we work hard to make sure that our lenders understand all the data that's available, that as much of that is available to the appraisers, to an AMC if they're involved, and just all the different parts of the ecosystem. I mean, so think about all the data that's in an MLS listing, right? And how do we work to make that all easily conveyable and usable by all the different parties within the ecosystem. And that's part of what data standards are about. We're all in the middle of the move to the UAD 3.6, which is making more and more of the data that's reported by appraisers universally usable. It's things are valuable when they're usable. It's more valuable if I can use it for more purposes. And so to me, that's a big shift that will allow the ecosystem of the mortgage world to figure out how to manufacture a mortgage in a different way than they do today.
Shawn, we don't have on the agenda today to talk about UAD 3.6, and you have provided a lot of interview and content and guidance to folks around the country on this over the last several months. So maybe we'll have some time at the end, but I think part of what you're talking about is the allowance of the separation of some of these tasks within an appraisal, and even outsourcing of some of those tasks to other individuals, property data collectors, et cetera. In that this podcast is aspiring to be kind of a joint study with us and anybody that's listening. There's a really good podcast with Joe Rogan and Jensen Huang from NVIDIA, the CEO from NVIDIA, recently released. And he was talking, I think this is in the same vein, Shawn, that Jeff Hinton, who sort of created optical image recognition in AI, the first real breakthrough, had opined that radiologists within 5 years would be sort of extinct. That was his, he's an AI guy, not an economist or industrialist or anything like that, but had suggested that was the case. And to look up now, many years after his 5-year prediction, and there's something like double or triple the amount of radiologists that exist. But AI is, there isn't a radiologist that is not using AI every day now. But so Jensen sort of partitioned out the extinction narrative of, if all you do is a task, AI can maybe replace that task depending on the task you do. But what do radiologists really do? They diagnose disease, and radiology or X-ray analysis or whatever is just one little task that they do within that. And so now you can do a lot more radiology tests, because of the AI that's there. And so there's a higher demand of what it can be used for. And I think as you're talking about the appraiser and their changing role here, what is the appraiser's purpose? It is not the individual task. It is the narration of the accumulation of the data, or an analysis of it to render an opinion.
Yeah. If you think about what our licenses as appraisers, what are we licensed to do, right? Why do we need a license? It's so we can form an opinion of value that's usable in a federally related transaction. And those are, if you look back to FIREA and why the licensing and such exists, and before that it wasn't a license, you held a designation that validated that you knew what you were doing. Now we're licensed, and so if you think about what are we licensed to do, it's to form that opinion of value. Our license doesn't license us to go to a home, say, and collect data. That's part of how we do our job. Or what we're licensed to do is figure out all the different data and information out there. What can we do with that to form an opinion of value? And to me, that's where the appraisal industry will change over the next many years. It'll be the things we're not even thinking about now in terms of how we get access to information and data. I mean, the first time you saw a walk through the house 360, you were like blown away, right? Now that's kind of like, well, where is it? Why isn't it in here if it's not there, right? It's become almost ubiquitous, right? And the digital floor plans that are now part of listings frequently, and just the dozens of photos. So much of how that operates is changing, and to me, that's where appraisers, the industry, can look and say, okay, where is our unique value proposition? What do we bring that makes the ecosystem more safe, I guess, or it's the ability to analyze that data and give it to the lender in a way that's useful, right? I think that if the industry stays focused on that, and how can we use AI-based tools and other things, how can we use those tools to do what we're asked to do and licensed to do better, that's going to position us to solve problems, to help the mortgage process be simpler, be more streamlined, and help lenders take advantage of more of the automated tools in a safe way. So that anyway, I think there's so much. We're moving so fast now; it can almost feel overwhelming of all the potential threats. But I do agree with your thinking, Mark, in that I don't see extinction for appraisers. I just see a change in how we do what we do. Just like a radiologist isn't, operating an X-ray machine and looking at, developed films that they just developed in the back. They're getting emails with high-res scans that somebody else, some X-ray tech took the pictures, and now he's sitting at his house analyzing this information with the help of AI that's telling him all the things that it saw. And then this individual is, doing things differently, but still adding the value of the analysis and diagnosis.
Yeah, I think that's a good point, Shawn. And nobody, I mean, if I'm going into the doctor or the radiologist, I don't want just a machine spit out, telling me you've got cancer or whatever the diagnosis is, without the human who's got that level of experience and that can connect the data points. And I really do believe that appraisers are professionals and should be operating in a professional type of capacity. And I see some that say, well, hey, if I can't, touch it and taste it and smell it, not that, you're really doing that anyway, but if I can't do all of the pieces, then I can't do any of the pieces. And it's to me, a little bit like the radiologist saying, if I can't plug in the machine and if I can't do all of the manual labor to get the output that I need to then go about the actual diagnosis of the disease or not, then I can't do any of it. And I get that it's uncomfortable for some, maybe many, that have been doing appraisal a certain way for a long time. At the end of the day, I think it's kind of ushering appraisers to be, more of a consummate professional that says, hey, take all of the data and make sense out of it. And I'll tell you, as we work with and try to train new appraisers and even work with existing appraisers, and you've referenced, Shawn, the feedback that the GSEs have given the appraisal profession, like generally, hey, there's room to improve. We need better analysis and more coherent, more consistent, kind of analysis of the information. There are a lot of data points, and it's not an easy thing to do, but it's a valuable thing when an appraiser can say, this home sold 2 years ago, this much money's been spent on it, these are what the comparable sales look like. I can tie all of these data points together in a way that maybe I'm not the one that got all of the information about the property on site, but there's just a lot that goes to telling a comprehensive story. And sometimes it's not what people want to hear. I mean, there's got to be the independent piece, to what the appraisers do consistently. But I think there's room to be better at what we do generally. And I mean, I talk to a lot of agents and even loan officers, and there is frustration when an appraisal is a pain point. But aside from like at the transaction level, there's generally an appreciation and a value and a respect that they have for an appraiser's ability to value the property, because it's just not an easy thing to do. And agents work on pricing them, but they'll often reach out or ask for guidance on hey, how much is this 5,000 square foot shop? What's the value of that relative to this 2,000 square foot house? Like, I know that it's probably not worth what they spent on it, but I don't really have a good way of getting at what the market's actually going to value that, just as a single example. But there are a lot of ways that appraisers, very scientifically try to study and diagnose what are markets actually doing, and how can I demonstrate that. And there's value in that. I'm with you. I don't see it going away anytime soon, and hopefully not at all. But it's just focusing on what is it that we really do, and what do we really add value in doing, and what isn't necessary in that.
And what does the market need, right? I mean, if you follow what the market needs, if our client doesn't need an appraiser, this is an example. If the client says, I don't need you to go to the house, I'm comfortable with the risk profile if you analyze the data that's available in the marketplace, or here's some data that I have that, if you can verify it and trust it, then that's, use that to do the valuation. So, to me, it's about looking at what is the client asking you to do, and how can you deliver that effectively, right? So there's ways we've traditionally done it, but again, I think things are going to change significantly, even from where they are today, to where, as an industry, if we can hold on to the components that we are most suited and licensed to do, that analysis component and the use of the tools to analyze the data, the value of the appraisal will continue to grow as it fits differently into these different scenarios.
Shawn, I think I am one. So I one of my biggest criticisms about us as appraisers is that we just aren't listening to our clients' needs. We, for whatever reason, maybe it's because we have to hold and develop opinions that aren't always popular and that sort of thing. It just positions us maybe in a position of authority. At least we think we're in a position of authority. And so we often think the client should value what we think they should value in an appraisal report. And I have found that isn't the case. We need to be valuing what they value and understanding what it is they value. And I really think your article is this certainty and, quality the first time and not having to revisit and things like that. I think it's really speaking to and maybe a call to what users of our services want. And I think we should be listening to that.
Yeah, I appreciate that observation, Mark. It's easy to sit back and pontificate on what the way things ideally would be, but my goal in that was to help us focus our energy on the right things, right? Because at the end of the day, if we point our energy on the parts of the process that are not where we add the most value, then I don't think we're going to be helping the process, right? We're not going. If the lending community is working towards a shorter closing time with a high degree of comfort and certainty, we can participate in how do you do that? How can we help that happen quicker or help that happen more consistently? And what are the tools in our repertoire? Under the guidance of the USPAP standards, what are the different ways that we can offer our opinion of value and provide the information that the lenders need, that in other parts of the industry too. I don't want to just make this all about lenders, but to make it to help the clients get what they need so they can evolve their process and make it better. Because it's, again, the appraisal is just one component in the manufacturing of a loan.
I think that makes a lot of sense, Shawn. And it's one of the things that we thought a lot about is, how can we, provide value? And even before your article, how can we provide comfort and certainty? We maybe wouldn't have used those exact words, but we try to do things like, hey, borrower, we're going to come do an appraisal on your house. Tell us about it. What have you done to it? How long have you owned it? What you want us to know before we even get there, so that at least they have some input in the process. Now, at the end of the day, you're going to make your independent, analysis, but, doing little things to try to help get the information you need, help set their expectations, and then certainly not drop the ball on what those expectations are. You know, if you say you're going to deliver it by a certain date, you got to do that or better, you know, because those things do erode trust. And then the, you know, lenders don't want to, you know, continue to work with appraisers that do those sorts of things. But, you know, I think one of the big takeaways for me from your article was that there's still more room to go. There's still more that can be done in adding to the comfort and the certainty and just them knowing what to expect and then following through on what those expectations should be. And I hope that what your case that you're making comes to pass, that, you know, that lenders can get more comfortable ordering the appraisal at least somewhat earlier in the process. It can compress the entire, you know, process without putting more pressure on the appraisers if that happens. But I think part of what you seem to be saying, Shawn, is in order to facilitate that, the appraisers have to be, you know, doing all that they can to provide certainty, to keep down the revision requests, the reworks that are needed on appraisals, in order for the lender to say, hey, yeah, we're going to be okay reevaluating our process and ordering it early on. At some level, it seems like if they anticipate revisions, that might be another impetus to just order it earlier on in the process in the first place, you know. But I think I understand the point that you're making too.
There's obviously a lot of this that's out of the control of the individual appraiser, but as an industry and as a, you know, profession, there's, you know, it's where do we focus our collective energy that can make the biggest difference in moving the needle, in improving the scenarios, in working, you know, with the innovation and changes that we know are inevitably going to be coming down the pipeline. It's how do we take that information and take those cards that are being dealt, so to speak, and come up with a winning hand, even if it's not exactly the way we've been operating for the last, you know, 20 years. It's there, and we're still in the game. We're needed and valued, and there's a whole bunch of things that the appraisers bring to the table that are certainly valuable. And to the extent we can emphasize that and focus on that, I think it'll be a positive for all of the components.
Well, Shawn, I'm borrowing from show notes that Jeff made here for in preparation for this podcast, and I think this is I think it's an exact quote from the article. But to summarize, I think it's a really good summary that quality is the catalyst for speed, and that certainty is the true currency of collateral valuation. And I think that is your larger point and message to appraisers, and it really resonates with me. You know, I want to thank you for joining us today on this late evening as we're recording. I think it's even later, maybe your time if you're in the Eastern time zone. And thank both you and Jeff for kind of expanding your friendship to include me in it about a year ago here. And I'm really grateful for that.
No, thank you for the invitation. It's always fun to have a discussion, and hopefully we get the opportunity to have many more.
Yeah, we definitely look forward to it, Shawn. We'll condescend to adopt Mark into the friendship circle here, I suppose. But
sure.
And Mark, just for your comfort, that was a direct quote from Shawn. I wasn't bright enough to have coined something, you know, that insightful. But I do think it really does summarize well kind of what can lead to speed and it's quality. It's getting the reports in ways that don't require, you know, back and forth. And a really insightful article, Shawn. I'd encourage anybody who hasn't read it on the Appraisal Buzz to go check it out. Most things Shawn says are worth listening to, so we make a habit of that at a minimum.
For any that have let the stream go while they fell asleep, wake up. We will put the link in the show notes here, and I will be taking instruction from this in how I run my business, and would suggest a lot of people do the same.
Amen to that. And till next time, Shawn, really appreciate it. We will make you a repeat guest as long as we don't manage to get you fired in the process. So
not at all. Thank you very much.
Awesome. Till next time.